there's another interesting thing that's happening. Now, if you guys aren't aware, so another thing that impacted Ethereum overall, obviously, was staking. There's something really weird going on, but to give you guys an idea, Ethereum started out as a proof of work cryptocurrency, and then they moved into validators and nodes. And obviously a part of that was moving to something called proof of stake, which means there's no actual power being utilized to generate the new cryptocurrency, or very little power. So yes, it's more efficient, but this means obviously, because energy cost is everything, then there's no cost tied to the generation of new currency. You thereby obviously depreciate the value of said currency, because obviously if you get something for nothing, then like, what's it worth, right? I mean, that's why people tout, power laws. They talk about, Bitcoin is energy, these types of things, why Bitcoin's so impactful. There is something weird happening though. So there's apparently a $2 billion Bitcoin staking protocol called Solve. And it is going to be Sharia compliant, and it will be offered in the Middle East. So this is a Bitcoin staking protocol called Solve, which has over 2 billion worth of Bitcoin locked on its platform. And it was announced Tuesday, the launch of the Sharia compliant yield product called Solve BTC.core. Now, there has always been like this idea that, and this isn't directly utilizing staking to solve blocks to process transactions as you would think in a traditional staking form, but this is, you give a third party your Bitcoin, which is ill-advised in general, not to mention it's Sharia compliant, so I don't know exactly what other issues there are with that in particular, but you don't hold your Bitcoin at that point. Obviously, another third party holds your Bitcoin, and the idea is you give them a bunch of Bitcoin, and then they generate revenue off of that, either by trading or just by the price of Bitcoin going up, or utilizing it for loans and lending. In this particular case, I think lending is definitely part of it. It says it includes lending, restaking, liquid staking, and decentralized exchanges. So they could be converting it to something like Ethereum and using liquidity pools over there, or utilizing, it for liquidity pools in cross-chain type, what do you call it? Why did I just draw a blank on that? Bridging, right? So bridging, going from one chain to another, like from Bitcoin to Ethereum, decentralized forms of that. There's all that can be utilized with that to generate additional revenue. In this particular case, you would give them the money, they do the work for those particular things, and then you get it, but it's not solving any reward or solving any blocks or doing anything along those lines. The question is like, how close to the white paper of Bitcoin is this? And obviously it defies the law of like not being involved with third parties right off the bat. So I think it may be Sharia compliant, but it's not Bitcoin white paper compliant, right? Is the way I would put it. Created with guidance from Nawa Finance and accredited by M&E Advisors for Sharia compliance, Solve BTC.core generates yield by securing the core blockchain network and engaging in on-chain DeFi activities while adhering to Islamic finance principles. Solve protocol enables Bitcoin holders to lend, stake, earn yields, and invest, unlocking the full potential of their coin stash. The launch of the Sharia-compliant Solve BTC.core means Bitcoin holders from the Middle East can now directly participate in the core blockchain's expanding ecosystem to generate additional yield on top of their spot holdings. Anytime this stuff has been utilized too, by the way, it's ended in disaster. I mean, we could go back to BlockX, right? Or not BlockX, that's the cryptocurrency. What is it? I don't know. There's a few different ones. Celsius. Now, none of those are Sharia compliant, but just because it's Sharia compliant doesn't mean that it doesn't end in the same way that any infidel version of this staking would end, right? Or has ended. So just so if somebody's looking at this and being like, well, because it's Sharia compliant, is this a safer version? Or not, I think the answer would be no, right? At the end of the day. Now, it does say by aligning with both regional and regulations and global finance standards, it paves the way for sovereign wealth funds and traditional financial institutions to securely and confidently stake Bitcoin and earn real on-chain yields. This is a significant step in accelerating the institutional adoption of digital assets in the region, Chow said in a press release shared with CoinDesk. Shakir Hashim, core contributor at Nawa Finance, said that Bitcoin is the most widely held asset in markets like Saudi Arabia, the UAE, Pakistan, Nigeria, Indonesia, and Malaysia. And the next thing holders are looking for is the generating of additional yield. Obviously, this has been a ploy since the beginning of cryptocurrency, which is I have Bitcoin. Can I get additional yield? Then there's companies that come along like Celsius. They're like, hey, give us your Bitcoin, we'll generate additional yield. And then you end up with a Sam Bankman-Fried situation, and all of that Bitcoin kind of disappears, and you're left with nothing, at least for quite some time, until the price of Bitcoin goes through the floor and the courts somehow figure out how to get you back a portion of it, and bada bing, bada boom. It's not great. I think, at the end of the day, my understanding, like it says here, Saudi Arabia, the UAE, Pakistan, Nigeria, Indonesia, Malaysia, strong Bitcoin holdings. My personal opinion, if that's within your religious viewpoint with Sharia law and you can hold your Bitcoin and be autonomous and have that individual sovereignty and control over your finances, then that's the best way to do it. It is like, oh, well, I might miss, 6 to 12% annually of additional revenue. Sure. But if you do it and then it fails, and the thing is, like, the reason I'm so hard on these types of things, whether it be Pi, whether it be staking and yield farming, all of this type of thing, unless it's in a decentralized manner, and even then, decentralized manners, you got to be careful because there's things like LiquidX, etc. But the reason I'm so adverse to these is just because I've seen it happen in the past over and over again. Bunch of people put their money in, the initial rewards look good, and then they influence a bunch of other people to put their money in. Then the crypto market crashes, and then the company or project or whatever it is goes insolvent. Everybody loses their money and nobody gets it back. And that's pretty much rinse and repeat every single cycle, right? I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.